So the first setup, Richard, if you want to go ahead and cover the Launchpad setup.
Yeah, sure. So the Launchpad setup, Ross is huge on this one. And again, it comes from studying a lot of charts. We're looking at the key moving averages, the 21-day simple, the 50 simple, 65 EMA, and basically watching for after a correction, we start to see a move upward. All the moving averages compress here, and everything moves together, and it's basically compressing the energy. And from this bunch up of moving averages, where they're all very close within a few percentages, we often see directional movement in the stock and group to the upside. It's very similar to looking for the first base after the bottom. The stage two breakout. All these things are kind of looking for the same price and volume characteristics. So if you go to the next page there, we've got some examples. There's the Launchpad. You can see all the moving averages compressing together. I'll add my annotation tool so I can point some stuff out. Right here, you can see all the moving averages compressing together. We see some constructive price and volume characteristic where the stock is flagging out on a decline in volume. We see a breakout on increased volume, and then the resulting move upward.
And what made this a setup was one, relative strength. That was the edge, right? Second, the moving averages were bunching up, so we now expect contraction in price, yield expansion, or volatility eventually, be it upside or downside. And the market came out of the 2019 correction, and Coupa Software went from 60 to 140 bucks. Me and Ross were both on top of this name, and we both had a position. So,
yep. Yeah, I was just gonna say, but remember, just because this is a setup, this could have broken the moving averages and failed. So it's all about probabilities, knowing what to expect. This acted well, broke out on volume, but if this breaks expectations, you got to wait until it sets up again, and it could just need more time in stage one. Moving over here to the right side, again, we see all the moving averages bunch up together within a few percent. We see constructive price and volume characteristics, and we get a resulting uptrend above the moving averages. So once they compress together, look for that expansion coming from that pattern. So that's pretty much it for the launching pattern. Yeah, go ahead.
This is also Coupa Software. So it's the same stock back in 2019, and I believe this is 2021. It did the same thing. Same exact formation, same launch pad, right? Higher. This one had a little bit of a higher low. This one had, an equal amount of low, but they both exhibited this relative strength plus launch pad on the right side that yielded returns. Coupa, this was the last bit of the Coupa run, and now it's pretty much
yeah, and if you study pretty much any leader coming from a significant correction, you'll see this launchpad setup. It occurs again and again, and within groups as well. You'll see it in the ETFs. You'll see it as a whole in groups. What were you gonna add?
Yeah, someone was asking the stock name. This is Coupa Software, COUP.
Yep. So, all right, moving on here. The gapper setup. This is your bread and butter. We've already kind of touched on this today, but do you want to?
Yeah, we identified an edge. The gapper setup is basically, I tend to only look at where the daily closing range and the weekly closing range seem to be better than the markets, or greater than 50%. Those ones have the higher probability. Some, like Piton, when it did the highest volume ever back before its run, did not have a closing range of greater than 50% on that particular day. Could be a reason I missed that whole run. That's absolutely fine, but there's some metrics you want to define in terms of the quality of these names. If a biotech name that reports that fish oil is the greatest thing and they've cured liver cancer or something like that, and it moves from 2 to 14 in a day, it's hard to define risk on those names. Don't throw out everything else that you know and treat this as a golden egg or something, like whatever you think this is, but have, try to say, this is quality, this is going to move well, this is going to be tight, I can manage my risk, this has a good story, etc. Right? What the market theme or the market trend is. And then there's these other ones like GMC and, GME, AMC type that can move up, right? DWAC, DWAC. Those ones are short term. They're much faster, harder to manage risk. They're not moving definitively. They're driven by events in the market where it's harder to manage risk. So there's that type of, setup, and then there's this other type of setup that happens. So learn to have identify quality, basically, is what I'm trying to say. Learn to identify, the quality names from the other names as much as possible. So that's what this slide is about. So powerful gap up associated with catalysts, often linked with earnings. Look for overvaluing volume. That's our HV edge. Look for high DCR and a gap up to continue that price action. Often move starts with the gap up. We've seen that in many, many names. Even the smaller ones like CDLX, that's tripled. AEHR, that went from 5 to 30. Arlo, that went from 5 to 10, etc. Those all started from these powerful gap ups. Early gaps in a move are preferred. First gap up of AEHR was at 5 and it went to 30. First gap up of Arlo was at 5 and went to that. So there's, I know traders that say I will never trade a $10 stock. I know traders that only trade $10 stocks, etc. That you have to define for yourself. But if you see overwhelming evidence and a similar price pattern over a span of time and you master that, there's no reason you can't be trading those. So that's the gapper setup. And here are some examples. So we have, let me try to guess some of these. This is Twilio, I bet. Highest volume in a year and high closing range. That one continued up and out. This was kind of, I believe this was the very top in Twilio. Now it's at $50. But this was a run, 50% closing range, 67% move. The market comes out of COVID correction, the thing goes, right? This could be Snapchat. This would have been the third or the second gap up in Snapchat, greater than 53% run. And this was also the top, likely, before we rolled over on many of these names. This one, highest volume in over a year, follow through, 50% closing range, markets in an uptrend, things are lining up, right? In terms of the setup, that's why I look for 50% closing ranges, increases my probability of being in a winner. So these are some of the examples that we have. Richard, let's cover the next one, the right side setup.
Yeah, so this is basically looking for shorter term entries in an overall strong stock, and this could be up the right side of a base or after it's already broken out the first few tight areas, pullbacks to moving averages, that type of thing. So here's some things to look for. Look for compression against support / moving average. Look for volume and price contraction as it pulls back. Look for a pickup in volume from that tight area. And this is just a nice reminder here. Leading stocks will provide multiple entries where you can manage risk even if you miss the base breakout. So even if a stock breaks out on the highest volume ever and goes up 20%, that's likely the start of a move. And there'll be multiple spots where the stock will consolidate, compress, tighten against prior support, a spot where you can manage risk, a moving average, whatever it is, anchor VWAP, and allow you to manage risk effectively and position in that name. RAI might trade, the HVC breakout, I might get in a little later. The point is identifying high potential stocks using the edges and then using your own preferred setups and entry tactics to execute, manage risk, and position in the name. That's kind of the key thing there. So moving on, we've got, I think, just one example. It's a little bit blurry, but there's just kind of multiple spots. Here's another launch pad. This is kind of the initial spot to get in. Then we see some pullbacks to moving averages, some reconfirmations to the upside. Again, we form another base. We get the first pullback to the 50-day, and then some other tight areas. So you're just kind of looking for those individual spots. I believe, this is NEO back in 2020. Yeah, it says it right there. And I bought this right here, but I missed this entire prior move where somebody who likes the stage 2 breakouts more might have bought it. And this was one of my best performers along with Tesla that year. So there's many in a leading stock that's going to go up 200, 300, 400%. There's going to be so many different entry tactics, setups that you can use where you can manage risk And I personally like the tight areas and compressions versus that usually 21 exponential moving average. So, Brian, I know this isn't your preferred setup, but anything to add on this one?
No, I think, Launchpad, relative strength, big volume causes that up the right side movement, right? So all those elements are kind of present over here. This is stretched into the move up the right side. So as long as you see contraction, when you see contraction, you can manage your risk. You can then place a trade. At the end of the day, all traders, successful traders, are trying to do is minimize risk, and tight areas allow them to minimize risk because they anticipate direction one way or the other and place stops relatively close to the bottom of whatever that tightness may be. So,
Yep. And we've got a bonus pullback to set a support or a moving average. This is very similar to the previous one. Look for prior strength, strong trend, and then pullbacks to key levels / moving averages. Ideally, you get constructive price and volume action during pullbacks. We always talk about the drift slowly back into the level versus a sharp decline. That's preferred. That's suggesting that institutions are still accumulating even as the stock is pulling back. And then we're looking for strength versus the key levels. We want to see evidence that it's being supported at that level, that the market is with us. Strength after the dip, Shannon always says, look for tight ranges at those levels. And examples of support could be tops of bases, high HVCs, moving averages, anchored VWAPs. Your style could just be, after the breakout, look for that first pullback to the 50-day where it's been supported and look to buy that. That could be your bread and butter, the only setup you use in the markets, and you can make millions. So that's pretty much the bonus setup. And I think moving on, we've just got a few more slides. Here's an example. This is Uber. Again, here's the base. We get extreme power. You can see it was supported in this area. You could buy it off the 21 EMA here as well, where again, we form a tight range right here. So you could either buy the pullback, buy strength after the pullback. We've got the pullback to the 50-day moving average, and as well to the 21 EMA and 50-day right there. So just a good example of a different areas of pullback to, this prior base pivot, that area, or the moving averages during the trend.